right, I think we're on. So today is kind of a short review of yesterday's trading. I don't have too much to say here, so let's just go ahead and get right into it. Disclaimer, I am not a profitable trader, so take everything I say with a grain of salt. These videos are a way for me to remain accountable with reviewing my chart after each trading day. This is not an attempt to teach you how to trade. If you'd like to learn how to trade, please visit Max Pat's or Thomas Wade's YouTube channels, linked in the description. First off, I messed up this trend here, and I thought that it was wider, and the reason I thought that it was wider is because this uptrend already has a break and a new high, so it's played out. And whenever that happens, generally you keep your trends wider, but you can see down here that both Mac and Thomas had their trends tighter with a break and new low, which totally makes sense after the fact because this wider trend never gets a break and new extreme. So you can see prices just break it and then they start heading higher. But at the time, I don't really see how I would have been able to see that. For one, I could have had this trend a little bit wider. So maybe I kept it too tight, because if I had it wider like this, then it wouldn't have really made any sense and it would have been too wide at that point. But I'm not entirely sure. So I went ahead and asked Thomas in his Discord to see why he drew this tighter, and I'll update on the next video. Now, next place I messed up this spike in channel here. So I initially drew it like this, but you can see there's a couple of issues with this. First off, we're skipping kind of a lot of swings right here. So there's kind of some empty space up there and a little bit of empty space up here that doesn't really make much sense. So Thomas preferred this spike in channel right here, which does still skip some swings here, which is not ideal, but it fits a little bit better on the channel side. And I would say it even fits better on this trend side as well, because if you look at mine, we're skipping a lot of swings right here in the early part of it, and then it works well in the end. But I think you'd really prefer it to kind of work on the early side and just keep prices kind of a little bit tighter. Also, you can notice that there's this little piece right here, which is exhaustive action. It totally makes sense for that to be an overshoot. So you can see whenever you get a strong move at the end, so a strong move at the end of a trend. So you can see this is like after the push phase that already happened, and then you get the strong move. A lot of times that's exhaustive action. So that's one clue that that's an overshoot. So that just fits better. It's something I messed up. It didn't really impact my read of the market too much, but it could in the future. Now, next, Thomas had this range drawn right here really early on. And then I didn't draw this until a lot later, whenever prices bounced here again, or started to find some resistance here again. And then I started to say, okay, well, where might that range be? And I'm happy that I got that, at all, because the reason that I drew this was kind of in response to a couple days ago, or whenever, I can't remember what day it was, but in one of the reviews, I noticed that I was not really drawing these ranges like this, and I was kind of missing them. So I'm happy I got that, but I could have gotten it a lot earlier. So, what was Thomas seeing here that he wanted to consider that earlier? I think, for one, having this shorter term downtrend playing out super early, so playing out super early there kind of helps you find that this might be a range here. And then secondly, whenever prices push back above the EMA, so those two clues, prices first off pushing below the EMA but playing out early, so they're not continuing down like you'd expect after this uptrend getting a break and new high, and then prices pushing back through the EMA here are kind of what shows you, yeah, this might be a range. It doesn't end up being a range, but at that point in time, that's how you probably want to be playing it, and I was just a little bit late to figuring that part out. Now, this trend, I incorrectly widened this trend out, and the reason I did that was because prices were still kind of chopping higher here, and it didn't look like a very climactic break of the trend. So this would have been the break, and that's how I had it initially, which is like both Mac and Thomas have it, where the break comes with that sideways action. And at the time, I remember thinking, well, that totally makes sense. You don't typically get sideways action inside of any kind of trend. Like whenever you get sideways action like that, like lots of times it is a break. But then I sort of got confused a little bit whenever prices continued to chop higher, and especially whenever there was the break and new high already. So prices hit the break and new high, but then the EMA was continuing to hold and prices were continuing to chop higher. And I was like, okay, well, there's probably a wider trend here. So I widened it, and you can see there is a lot of empty space by widening it. you know, there is that empty space on the other trend anyway, but you kind of skip this swing, which is not ideal. And then prices don't touch again for a long time. And at that point, you can probably say, well, that's probably not correct. And instead, I should have, just seeing the prices were kind of working higher here still, you know, maybe I could have went ahead and started to look for some sort of spike in channel like this. And I think I did consider that. I just didn't quite get it right. And that might have helped me find the spike in channel that ended up being right later on, which we'll talk about. And speaking of talking about it, here we are. So I ended up finding that spike in channel kind of late. So this one here, which went up and through, and you can see it on Thomas's chart as well. I ended up finding this one kind of late because with the way that I had it drawn, which I was talking about, is a little bit wrong. I extended this trend kind of incorrectly. I saw this as a break and 2 legs to a new high. And then I was looking at this as what I believed was about to be kind of a range action, like topping action right here. And so I was just a little bit slow in getting that. And Thomas says that he got it after the second entry longs right here continued to work. So after you already had the break and new high, then prices came back and they were holding the EMA twice. I mean, this one did push through just a little bit right here, but you can see prices are basically holding the EMA, and these second entry longs right here are working. So that second entry long worked right there. So you have to wonder, okay, why is that happening? Why is the second entry long working? And why is the EMA holding right here, even though you have a break and new high of this uptrend right here? And that's how Thomas ended up finding this pretty early, even though he said it didn't really look quite right, but he was still able to find that, yeah, there probably is another channel going on here. And that was something I was just a little bit late on. I didn't find this one until prices pushed back above the EMA again. And that's whenever I was saying, this is kind of weird. Like, why are prices doing that? And then that's whenever I went ahead and drew this one. So I was just, again, a little bit late on that one. Just need to be a little bit earlier. Oh, also, I guess one other thing. Because I thought that this uptrend had just already played out and there wasn't another trend. So instead, at this point, I should have been viewing it first off like this. So this uptrend coming up through here, then having the break and new high here. So break and 2 legs up here. Great. And then prices are coming back down and holding the EMA. And then because I was viewing it the way that I was, I ended up widening this downtrend here and was expecting further downward action. And that could have messed me up, definitely, and could have cost me or caused me to miss some trades, whenever really I should have just around this area been thinking, okay, well, this is really a spike in channel. And then I would have just been sticking with the tighter trends here, which ends up just being like a tight kind of 2 legs down. So some potential mess ups, but nothing that was too bad there, just something or a place that I need to be a little bit earlier. I ended up taking this failed second entry short, which was the incorrect decision. I felt really solid about this one at the time because you're within this spike in channel, which I felt very solid about at this point because you have 1, 2, 3, 4 touches right there confirming it. And then you basically have 2 touches on the opposite side that really made me feel comfortable with this spike in channel. It's a very clean failed second entry short with a nice signal bar. And I think I was just so close here because I think the idea was right. The pattern was all right. The issue here was that the body is so far from the EMA. So even though you're touching the EMA here, the body is so far from it, and like the wick kind of looks like it's on stilts. The second issue, and I would argue might even be the bigger issue here, is that there's this little overshoot of the short-term trend here. So basically I had the short-term trend drawn initially whenever I was playing it just as a range, just like Thomas has right here. And also that range is another thing I will, just a quick aside, that I shouldn't have deleted this range, because even though you do have the spike in channel, this range is still correct. So, I mean, that's another reason you're getting pretty close to the top of that range. And you could possibly even say, in the way that I was playing it at the time, was with the resistance right here. And at that point, you've basically already touched that resistance. So that's one other thing. And basically the reason this one fails is because prices kind of come back and just find some resistance. But anyway, I deleted this trend here. So I had the shorter term trend at the time and I deleted it. And the reason I deleted it was because I realized that we were playing the spike in channel, and I generally don't draw the shorter term trends whenever I'm playing any kind of larger channel. I don't think that's necessarily wrong, But in this case, whenever you're taking a failed second entry, you need to pay attention to whether you're taking it right into the channel line. It's like specifically super important to notice whenever you're taking it into the channel line or after an overshoot. So that's just something I need to pay attention to, that whenever I am going to take a failed second entry, I should just go ahead and draw the shorter term trend no matter what. I knew that, let's say instead, we had the scenario where it's like we had a break in new extreme and then we had maybe 2 legs up right here. I know you want to draw the trend channel line here to make sure, to see if you're going to take like a failure. But in the case of whenever you're in a larger trend, it's something that I didn't pay attention to and that I need to. I also took this trade. I did kind of mislabel it whenever I was taking it because I don't think I realized that this broke higher here. So I was thinking that this was just a second entry long, but it's truly a higher low after second entry long because you have a first entry, second entry, and then you get the higher low above the EMA. I felt like this is a very solid trade. I was surprised that Mac didn't mark it. So you can see Mac's chart here, and he didn't mark it. He didn't even talk about it at all, which I thought was a little bit weird. I think the reason that he might maybe not prefer it is because prices push below the EMA right here, and you already had these 1-2 legs up to the channel right here. And I think typically Mac is a little bit more careful about not taking trades after prices come off of a channel line than Thomas is. Thomas is not like super careful about it, it seems, unless prices had, like maybe a double bounce. So if prices had came up and then touched it again, and then turned down, I would say Thomas probably still wouldn't have taken that one. But Thomas did take it, so I'm considering that a solid trade. Basically, the way that I classify trades is if Thomas or Mac marked it, then I determine it's a good trade, regardless of whether it won or not, because sometimes my targets are a little bit different than theirs. So that was pretty solid. Overall takeaways, I need to start considering ranges earlier, especially early on in the day. So that's just something that I've continued to kind of struggle with a little bit and just need to work on. Trends don't always need a climactic break, and sometimes they just have a couple legs to a new extreme. So lots of times after a trend has a break in new extreme, and even if it continues up just a little bit, then I'm typically, trying to expand it, trying to find, what else is going on. But sometimes you just have a couple legs to a new extreme, and that's okay. So there's not always just one. Don't jump the gun on widening trends sometimes. Pay attention to whether second entries are working and be hyper vigilant on how prices are reacting around the EMA, especially after a break in new extreme. So this is something that I noted in a couple videos ago, or maybe it was even the last one, to pay attention to whether second entry longs are working. It's just something that I don't even really think about. It's just completely out of my mind, but it's something that Thomas has mentioned a couple times, so I need to be careful about that. And the other thing is, like I was saying, just be super careful about whether, or careful and make sure that I'm looking at how the EMA is reacting, and especially after a break in new extreme, because how the EMA reacts after that is going to be the most important time right there. Next is pay attention to how far the body of a bar is from the EMA. So even if the wick is touching, sometimes the body is a little bit too far. And I think I need to kind of calibrate, how far is too far, because I know if this was some, oh gosh, where is it? If this was some, like pure doji bar and the body was all the way up here, I would have been like, that's way too far. But I thought that this one would have been okay. And I guess this is still a little bit too far. And especially, again, considering the overshoot as well. So just 2 things to consider there. Next, draw your shorter term trends when looking to take a failed second entry. So that goes back to that trade that I was just looking at there. Just something that I typically don't do. Even if you're in a wider trend, you still want to draw those shorter term trends whenever you're looking to take a failed second entry, because you need to be super careful about whether prices are going into that channel line. And, I wasn't even considering whether it was, after an overshoot. So that wasn't even within my mind, and something I need to pay attention to. But that's it for me today, and I will record my review of today's trading tomorrow. So I'm going to start doing everything 1 day lagging behind, because I want to make sure that I can really give it the in-depth treatment. Sometimes it's hard to do that at night. Whenever, if I were to just give myself an hour, sometimes these take like 2 hours to kind of get prepared. So I want to do them right after the trading day. And to do that, I'm going to have to wait on Mac and Thomas's video to come out. So doing it the next day after the trading day is, I think, going to be the best way to do it for me. Some of them, of course, will be later than that, but that's what I'll be shooting for. And I will see you guys trading tomorrow morning.